All right. Hey, everyone. Mark here. Hope everyone is having a good Friday or a decent Friday. Welcome to another Greenbridge Investing market analysis. So in this session, I'm going to be going over this Bitcoin situation because it came out of nowhere, sort of like what's going on with the stock market. And we're getting questions about, is this a good time to start buying and this and that? And it's just not there yet. So that's the point that I want to make in this video, along with stocks, okay? So that's what I'm going to spend my time on. My goal is to try to get through that as quickly as possible, maybe spend about 10 minutes on it, something like that. And then I want to spend the rest of the session answering your questions. So if you have a stock or a market you'd like to see, please put it in the channel now. So once I complete my analysis, I can get to your symbols, okay? So again, if you're new to the Greenbridge Investing channel, make sure you subscribe and also like the video. If you like the video, let me know that you like it. Every bit of encouragement helps. And check out our website at greenbridgeinvesting.com. We offer a swing trade signal service by text and by email. We have portfolio management ideas, and we have a chat room where there's a lot of market perspective shared each day. All right, so with that being said, this is for educational purposes only. For investment advice, please consult a licensed investment advisor. Now, we had NFP today, okay? And obviously, the report wasn't too bad. And the market is just, not really doing a whole lot in terms of the bigger picture. A lot of intraday stuff going on. So what I want to first address is Bitcoin, okay? And this is what I want to talk about. Now, there were a few people that mentioned here, and I'm going to highlight it. People had mentioned this head and shoulders, and we saw it. And I've gotten a couple of questions about why did we buy into that, or why didn't we short that? Well, after the fact, it looks great. Okay. Now, there's really two answers. First, for the time frame that our swing trade strategy is defined by, this head and shoulders was not meaningful. That's an important point. Just because a head and shoulders appears doesn't mean you're going to get such a sell-off. Now, if we were, hey, Michael, you like that line, huh? People give me a hard time about that line. Anyway, for people that are on smaller time frames, the head and shoulders makes sense, meaning maybe you're a position day trader, or maybe you're a smaller time frame day trader, and that short would make sense. But as a swing trader, this does not make sense, because the reason is this broader structure that we have since the March low is bullish. And I can't tell you how many times I've seen a head and shoulders develop, in such a situation, only to break higher and pull, suck in a lot of people short, and only to break higher. So that was the probability that we were playing. And there's no guarantee it's going to work out. We saw the resistance zone that we talked about. I've talked about it many times, going into that 655 trade that we took. And we had our risk defined. Now, how angry would have people been with us if we did not take that trade and then it broke out? People, I'd probably be getting like nasty emails saying, oh, you guys are no use. If the thing breaks out, you guys, are you guys watching this, right? So we see a buy signal in a generally bullish market. We're going to give it a try. And that's the right thing that we could do in this environment. We define our risk. We got stopped out. And it's a good thing we set a stop. A lot of people don't, because they figure, well, I'll just hold on to it. Our stop was at 950. Okay, so that was, around this area right here, 950. So we lost about, 700 and something points. That we would have lost a lot more if we had not used a stop. I cannot tell you how much money stops save. Same with that dollar Canadian pair that we had recently. We got stopped out 3 times in that pair. If we had not used a stop, that loss would have been much bigger. So now let's see what we're doing now, because again, now people are asking, is now the time to buy? Well, for our swing trade criteria, we have a number of things that have to be met to even think about getting into a trade. right? And the first piece of information or the first criteria is the location, all right? The location. And yes, we have it. We've been talking about this 10-500 location since August. We've been talking about if it goes there, it's going to be an ideal spot. If it goes there, and here it is, it's there. But that's just one piece of the puzzle. We don't just buy it just because it's there. Because what if this bearish momentum continues? We have to respect that possibility. So now we have to wait for two things. Price stability is one, and a setup is the other. Now, if we get an inside bar here, which might develop over the next day or so, that would actually be a long signal. So we are likely to take something like that because it's at our location. We'll have a setup and we'll be able to define our risk, which will be basically, what's the low? 966, 99.66. So we're looking at like maybe a 90.50 or 9,000 stop. That's where our risk will be defined from. Okay. And then we'll be looking for structure to rebuild back toward that resistance. Now, that's an aggressive trade. Why? Because we're still going against this bearish momentum and we don't have any solid structure. But because the broader trend is bullish and this formation does not change the trend, okay? The trend for the time frame that we follow has not changed. If you're on a 30-minute chart, sure, you could say it's bearish all you want, but this picture is not bearish on the bigger picture. So if we can get some sort of maybe mini double bottom or failed low situation, that would be ideal, but we're not going to wait for something like that since the overall trend is still bullish. We'll probably just get back in. Again, we're risking 1%. Excuse me, we're risking 1% every time. So we could be wrong 5 times in a row. We're losing 5%. Okay, so that's what you have to understand. People, when they come to a signal service, they're expecting like a high win rate strategy. And a high win rate strategy makes sense if you're day trading. But when you're swing trading, we're happy to do better than 50%, okay, as far as win rate. That's not where you make money. You make money in losing less than how much you make when you're right. That's how you make money. So you could be wrong actually more than 50% of the time and still come out ahead. And our track record has proved it. So anyway, so that's Bitcoin. Now, real quick, I want to address the stock market. If you have any questions about Bitcoin, let me know. And again, if you have any symbols you'd like to see, please share them in the channel. So Michael's asking here, would you consider a long trade for tomorrow on the high of today's candle? Or okay, so Michael, pretty much that's where I was going with this. And yeah, the answer is yes. If we get the inside bar, which it looks like we're going to get, then the high of that inside bar is 541. Obviously, we're not going to put the buy stop there. We're going to put it higher because we want the market to work. Because again, keep something in mind. And I'll if I send it out, I'll put it in the reasoning. So make sure you read the email. An inside bar after such a broad bearish candle can also turn into a sell signal if the low is taken out. That's a very common sell signal. And this thing could push lower, you know, before it provides some stability. So something to keep in mind there. You know, but I'll definitely share that information. So to answer your question, yes. Yes, I am going to go over the dollar franc. Absolutely. Especially since we're in it and it's working. So yeah, Michael, yep, this is the inside bar, but it needs to close. So although most likely it will close like this, we always have to wait because who knows? Things change real fast in this market and some dumb piece of news could come out. And next thing you know, this thing is breaking lows by 6 p.m., you know, our time. So that's why we don't make judgments early. The bar needs to close. And then we'll consider that long, possibly. It will be aggressive. So that's Bitcoin. Now, you know, before I get into the stock market here, I do want to just take a look at some of these other things, like, you know, Link, for example, right? Look at these things. They all got hammered. It's all the same. You notice it's the same idea. Got an inside bar. This is actually a nice failed low situation you have here on Link. Chain Link, see that? That's nice. This would also be a long signal. They're all going to be the same. Let's take a look at Litecoin. This is why you can't take them all. Looks just like Bitcoin. Also a failed low situation relative to this low right here. Failed low, inside bar. All right, can't take them all. It's all the same trade. Let's take a look at what's another one. that we've been watching. Let's take a look at Tezos, XTZ, right? XTZ USD. Look, got hammered, okay? Got hammered, and now again, failed low situation off of this low here. Same idea. You can't take them all. So you have to pick one that you like, one or two. Here's another one that people tend to like. Same situation. Now, I told people when getting into that Bitcoin trade, can't take them all. We were going over the signals in the analysis here, and people were asking, oh, what about this one? What about that one? And I was showing the charts and saying, yep, we got a buy signal here. Yep, got one there, got one here, but they're all the same, just like Forex. So it's a very important point. I know I repeat myself a lot, but it's important to really comprehend that. All right, so let's take a look at the stock market. Michael says, your ETH trade for those who got back in. Oh, well, I mean, if it, right, to the stop. So for those of you that are not familiar with Michael talking about here, I sent out an Ethereum trade a little while back, and here, I can show you that on the chart here. You can actually see the trade information on the chart, and it initially got stopped out on this first pullback because the stop was too tight. Okay, then it went to two targets. What was the high over here? 488 was the high. So it missed the third target, but you realize, and there's a very good lesson here. This is why we use targets, because if you were in that and you reduced your risk while you could, you don't get caught in this mess. So yeah, you have 1/3 of the position, but who cares? The trade is still green, even if it goes back to break even. So Michael's saying that it has not reached the stop. If you had used this 376 stop, what's today's low? Well, 359 or 370. Is that today's low? No, I'm looking at 359 here. So no, that would have reached the stop that I put in anyway. Again, so that would have been stopped out. The 1/3 portion. But you had a lot of flexibility in that trade if you were in it. When it went back to break even, you could have gotten out there. Like you could have raised your stop to break even, which is it's a common thing. There's nothing wrong with doing something like that. And you still have a green trade. You come out ahead, while many people who don't know what to do in this situation get stuck in it. And that's one of the great things about having us to guide you, is we at least give you the perspective and we give you the ideas on how not to get caught in those situations. Because if you don't have experience, you are likely to get caught. All right, so thanks for bringing that up, Michael. Oh, the euro. Okay. Yeah, so we're going to take a look at dollar franc in a second, but I want to go over some stock market stuff real quick because we've been getting questions about the stock market. Let me see how I'm doing with time, because I don't want to spend like 2 hours talking about my stuff, and then, that's why these things go for so long. All right, I'm going to spend about 5 more minutes on my stuff, and then we'll get to your stuff. Okay, so here's the NASDAQ, right? So we had that nasty sell-off. Great call by Andrew yesterday on that options trade. I mean, he caught like this whole thing and closed it out today. And now they're putting on more Qs, shorting the Qs. But a move like this, the reason why I have to address this is because many are going to think that this is the pullback to buy. They're going to say, oh, here's my chance to get in because I've missed out. I've missed out for so long. Here's my chance to get in on a pullback, but this is still too early in my opinion. Yes, you may be able to pick up a couple of stocks. If you're a day trader, this is perfect. But if you're not, and you think you're buying like a broader retrace, this is still most likely the beginning. Now, yes, this is a bullish pin bar, and we're likely to see an attempt at the high over the early part of next week if we take out this bullish pin bar high. But I must warn you, we will be looking for the next failed high for a shorting opportunity. So we're going to be looking at the Qs for a short. We're going to be looking at all those indices for a short. We're going to be looking for certain stocks. I can tell you right now, stocks on my radar. This one. All right, this is one that Andrew had called as a long a few times, Hormel Foods. Why do I like this short? Look at this lower high. Okay, that's what I want to see on the index. A nice lower high. This may be a good candidate to buy puts on, maybe for the next 6 weeks or something like that. Because if we're going to get a broader pullback, you're looking at, probably a few weeks worth, right? So you want to give yourself some extra time. There was another one that I was looking at. I think it was it, hold on, I think it was, I can't remember the name of it now. There was this one. Now check this one out. Clarivate. I don't even know what they do. But look at this interesting situation. Nice pin bar to go long at a range low. This would actually be a swing trade long candidate trying to play the bounce, okay? If it takes out the high on Monday, 27.90 is the high of this candle. So those are basically two examples right there of, one short, one long. Now, again, if we send something like this out, you will get a text and an email, especially if it's a swing trade. We'll send it out that way. But just something to put on your radar if you're trading stocks. Also, the other one that we've been getting questions about is Shopify, because we sent out this as a short idea a couple of weeks ago too. I'm not sure if any of you took this, but we were looking to play actually we were short earlier than that, and it gave us a failed high. Okay, and there are many stocks that have produced a situation like this. And now look at this thing, right? This thing today made a low of 970. I'm sorry, 899. This thing's closing at 970, or right now it's at 970. It's quite a recovery. But the point is, this bearish momentum is still in play. Yes, we have a pin bar, but this formation has been getting, difficult to begin with. And if the market cannot make a higher high, stocks like this are probably going to test these lower supports, and that's what we're looking to play. So this one would also be a candidate for something like this, since it's such an expensive stock. You don't have to trade 100 shares of it, or buy a call or sell a call or buy a put. I would actually be better off to buy a put. You don't have to buy 100 shares worth. What you can do, I know it may sound ridiculous, but what you can do is short one share or short two shares. This thing moves 100 points. That's a couple $100. Okay, that's not bad for, and are they really going to shake you out of one share? Probably not. Okay, so that would probably be the way to play it for smaller accounts. Obviously, if you have a larger account, you can do more than one share, but that's just something to keep in mind. All right, some people it never occurs to anyone, because of course a broker is not going to encourage something like that. They want you to trade size or more shares. They don't make money on one share. All right, so that goes for Amazon and Google and all these other ridiculously high stocks. Even Tesla, even though Tesla is much cheaper now, you could still play it with smaller size. All right, let's take a look at Tesla real quick. Okay, so yeah, look at that. So nice pullback off the high. How much did this thing pull back? 502 was the high, and it went to 372. Nice. And now you're getting a bullish pin bar. Like I said, common mistake is everyone's going to pile in thinking, oh, I got the nice higher low. But like I said, all of these stocks, if we get the lower high, then I'm not looking for a bear market. I'm looking for a consolidation and a test of the low again after that. So that's the strategy that we're going to go in with. We'll see if the market cooperates or not. Now, let me go over the dollar franc real quick, and then I'm going to get to your questions. I talk too much. I know. Okay, so let's take a look at this thing. This was the trade of the week that we sent out. I sent this out on Tuesday, Tuesday. And this was tricky because when I sent it out, it was fooling around the 91.25 area. But I knew NFP was this week, and I knew chances were we were going to get noise, because this thing has been very noisy, for one. For two, this is a stock that's been showing us, it's not a stock. This currency has been showing us some kind of stability for at least a month. All right, over the month of August there. It wasn't really pushing dramatically lower. So chances are it's going to bounce if the dollar bounces. We tried playing the dollar Canadian in this. We got stopped out 3 times. This one is the more stable pair. So I put a limit order in at 90.85, and it filled yesterday. Okay, you see the low here, 90.82. And today it went as high as 91.63. Now it's lower now, okay, at 91.25, but our first target is 85, so it was 20 pips away. But okay, you know what? It's doing what it should be doing. I don't care if it pulls back a bit and gives us a little tail. No big deal. It's behaving properly at this point. We have a double bottom in place. That's exactly what I want to see. A double bottom followed by this strong candle. Okay, we caught this little hesitation in here, and now we're looking for that next leg to continue that momentum. And who knows, between now and Sunday evening, some stupid little piece of news can come out. Next thing you know, dollar's pushing higher and this thing is pushing. So this thing has a lot of potential, right? We're only looking for a couple of hundred pips, which is relatively small. But we'll see how it goes. Anyway, just want to point it out because this is how something should behave after you get in. We used a limit order under the market. And the benefit to that is you're not reacting. You're getting a much better price in terms of reward risk. We got a much better price compared to if I had just reacted and bought it at 91 and a quarter. All right, most people, they don't think about stuff like that. They just buy it because they want to be in it. But if we miss this, the thing is you could miss the trade. It may not have pulled back. This pullback was just random noise. And maybe NFP could have came out a certain way, and this thing could have really pushed, and we never would have gotten filled. Okay, but that's a chance I take. But if that occurs, what do I care? I'm not in a position then. I have no risk. So if I miss a move, who cares? Right? That's the thing. I don't lose any money missing moves. And that's what people need to understand. It's okay to miss a move. So anyway, so we got a good price, and now the trade is in play, and we'll see how it unfolds over the next week. So I just wanted to point that out, and that's pretty much where I am here. Hold on, I'm getting an error from YouTube. Am I cut off? No. All right, so that's it. Let me see what you guys got now. All right, so do I have any questions from you guys? So I went over the dollar franc. Any stocks you guys would like to see? Any stocks, anything that you've seen in the chat room that you'd like to know more about? How about something like gold, XAU, USD? By the way, if you're new to Greenbridge, or if you're watching this video after the live stream here, please make sure to like the video if you like it. Also subscribe to the Greenbridge Investing channel here. Every time I do one of these, or when we do our podcast, Talking Markets, where that dollar franc trade came from, you'll get an email notification from YouTube. Plus, check out our website at greenbridgeinvesting.com. We have swing trade signal by text and by email, signal service, okay? And that's basically what I talk about here. We also have portfolio management ideas and a chat room where we put a lot of insight and a lot of market information during the day, which can be very helpful. Many here can tell you. All right, so look at gold, you guys. Gold, this triangle is very easy to see. You guys can see that, right? And I was waiting for that 850 level. 1850, not 850. 1850 is like here. So that's a little extreme. We're probably not going to see 1850. Gold may choose to turn sooner, okay? But since we are at a range low of the consolidation, I would be open to taking another long in gold because, I mean, this thing is obviously, it's strong, okay? This is the opposite of our dollar franc trade, by the way, because if the dollar retraces and goes higher, gold will break below this consolidation, at least temporarily. If the dollar continues to stay weak and there's more information that pushes that dollar lower, then this thing's going to go higher, and our dollar franc trade isn't going to look very good at that point. So just something to keep in mind there. Michael, euro, is it in a short or long? Okay, cool. Let's talk about it. And oil, sure. Let's talk about it. So let's take a look at the euro. Remember, the euro, anything against the dollar is pretty much, you're trading the dollar. You're trading the US dollar, whether it's the euro, whether it's the pound, whether it's the franc, it's the US dollar. All the major pairs are crossed with the US dollar. So that's really what we're getting involved with. Same with gold, right? That gold symbol is XAU, USD. So it's going to respond to moves in the dollar. Now, so the euro, again, look at this. So we got these pin bars right here to go long. See that? To go long. I mean, I don't like to see that being long the dollar franc, because if the euro pops higher, then my dollar franc isn't going to work very well. But we're going to see gold. Do you see like how gold was firming, and now we have this in the euro, which is a long signal? But here's the thing. So we may have that long signal now. And yes, the trend in the euro is bullish. Can't argue with that. Higher lows and higher highs. But we do have this formation which concerns me as far as longs. This formation, which is the opposite of the dollar franc, right? The dollar franc is a complete inverse formation because they're inverse to each other. This formation, where this thing is struggling, right? You have a failed high right here. Okay, see that? You have another failed high over here. Now, we didn't get much follow through on the failed high, but the fact that it's struggling to push higher and push higher is problematic. Something that's in a nice strong trend really shouldn't behave that way. What it should do is it should break and give you a nice leg, something like this. Okay, that's what it should do. So who knows? Maybe it will on the next leg, but if this thing fails again, or it gives you some kind of little lower high situation, you're going to see this formation break on the bear side. And that would be the dollar retrace, okay? So these aren't the greatest levels to be getting involved in the euro. Although, you know, if you're going to follow the trend, which is the right thing to do, then you should be looking for a long, okay? I mean, that would be the right thing to do. Yes, it's confusing because, you know, we're basically playing the opposite side of that because we're playing the broader formation. But again, if the stock market is going to have a broader pullback, it's probably going to have something to do with the dollar. The stock market doesn't like a strong dollar. So if the dollar strengthens, you're probably going to see the pullback there and the pullback here. The next inflection point for the euro, a place that would make much more sense for a long, would probably be around there, which is like the 14.22 area. It's hard to believe that it'll pull back that far. And who knows, maybe it'll find support sooner. But that's the only historical inflection point I have. I mean, look at this. Look how far back it goes, right? That level is pretty significant going far back. So, you know, you're going to have this area right here, like this range low area, which is what, 1695. So in the mid 16s, maybe a failed low. You may get that, and that would also be a potential long. But if that's cleared, you're looking at this, you know, 1400, whatever, mid 1400s area. We don't know which one the market will choose. We have to let the market tell us. But all I can tell you is taking a long up here, although it's the right idea, you have to be prepared for that dollar retrace. Just like we were saying, you have to be prepared for the stock market to retrace. People were asking about longs all during the week before the sell-off yesterday. And I kept telling people in these sessions, I kept telling people the same thing. Sure, you want to take a long, the stock, the chart looks good, but you have to be prepared in case the market has that pullback. And the pullback came out of nowhere. Okay, so that's the euro. So I hope that answers your question. Hey, Joe. All right, so let's take a look at oil. Let's see, oil. So I'm going to look at WTI, CO, USD. And is that the chart I want to look at, or just WTI, USD? Let me see. I want the one that has the negative, or is it USD, WTI? Is that the one? Yeah, this is the one. Okay, I'd rather look at this chart because this chart has the negative delivery situation over here. I don't like that Owanda removed that from their chart. So this here is a different feed. Now, so yeah, Andrew mentioned this the other day. We were actually talking about it briefly, an oil short. I wasn't crazy about the idea because this thing has just been doing nothing. It's just been out of play. And, you know, we had an inflection point right around this area here, which dates back to this. We had something like this here. I mean, look how nice, that looks really nice after the fact there. Okay. But the thing is, hold on a second. So the thing is, this was kind of a tough call. So now it's starting to pull back, coincidentally, with the stock market, right? So the stock market wasn't pulling back until oil pulled back, and now we have that pullback in oil. Oil is missing that recovery tail that we're seeing in the S&P and in the NASDAQ, which makes those, you know, those bounce attempts very questionable, right? So as far as oil now, I would not go long this yet. You know, can we argue that the structure is bullish? Yeah, there's no question that this whole thing is bullish. But I tell you, I don't like this at all. I don't like this lack of momentum, I don't like that because that tells me that there's a lot of longs in it and they're all waiting for something. And if it doesn't go their way, all those longs are going to start selling. So I want to see a heavier inflection point, a more meaningful one. And that's probably going to be around this area here, okay, relative to that gap around there. What are we looking at there? 34, the 34 area. So right now we're fooling around 39. So I would give this thing some more room as far as for longs. As far as shorts, yeah, he's been on top of this, but I haven't liked it because when I see something that's out of play like this, I lose interest very quickly. Because it's like oil also is a very heavily manipulated market, and if whoever's got control of that, they don't want it to be a short, it's not going to be a short, right? I mean, that's a conspiracy theory, but still. So I like to see stuff that's in play with clear momentum and clear signals. So this, as far as a short goes, I mean, it's worth a try if this thing continues lower, but not right this moment. What I would wait for, and the same thing we're going to wait for on the stock market, because remember, we're not looking for a bear market. All we're looking for is a broader retrace, okay? Going into the election, which is like what, 2 months or whatever, going into the election, that type of uncertainty can lead to such an environment. So it lines up in that way. What I would like to see is some sort of retrace attempt and failure, a lower high, just like the stock market. That would probably be a better place to try to short oil, like this 41 area, that low. That would be a good area, or maybe slightly higher, or maybe we even get the double top. But that would give you much better reward risk than trying to chase this thing, because right now people are going to be looking to buy these bounces. So I wouldn't short it, and I would be, if you're going to buy it, you got to be quick about it. Like, you got to be nimble. Like, meaning if you buy it and it starts to give you a hard time, get out right away, take the small loss, because you don't want to get caught, in these things. So that's what I would do with oil. There is no buy signal right now, and there is no sell signal right now. So just like the euro, if anything, it's in a slightly more attractive location to pick up a long, but it's the same deal as the stock market. People are going to be looking for that bounce. They're going to pile in, and if it doesn't make that new high, they're going to pile out, and you don't want to be caught on the wrong side of the pile. All right, so that's oil. Thanks for bringing that one up. Now, Joe, let's see. Any chance you could have a look at Square? Sure. Oh, thanks, Joe. So let's take a look at Square. Square is a stock that we've been following. And we haven't been doing much with this in recent time because, for one, we missed many of the buy signals in here, and not going to chase it. If we don't like a certain area and it's higher, we're certainly not going to buy it higher. Now, we have a failed, all right, so yeah, we're watching oil, and once we see a signal, believe me, we're going to look to get into it next time, especially if it's a short. So Square gave us the failed high, very similar to the S&P, because that's what the S&P gave us basically. It's a failed high relative to the March low. And now we're going to see if we get the follow through. So Square, just like the S&P, is giving this nice pin bar to go long, all right? And you're going to have many that are going to try to jump into that, especially if you take out the high of 152, basically 152 and a quarter. That's going to probably be the place to buy it, to look for that retrace. Now, that type of trade is probably better for an intraday type of trade or a very, very short-term swing trade, meaning maybe you hold it on to it for like a day or two, maybe, if you can get that push. But you have to be very careful because, like I said, if we see the selling continue next week or we get a lower high, then Square and all your other favorites like NVIDIA and Tesla and all the other ones, they're all going to look the same because this one pretty much follows them, right? I'd be looking for that lower high, and I'm not a big fan of shorting a lot of stocks, especially strong stocks. But what I'd like to see to go long, because I probably wouldn't short Square. Something I'd be more interested in shorting is something like Shopify, stuff that has very clear structure or very well-defined lower highs. like that HRL, and there's a few other ones we looked at. What was the other one? GoPro. I'm going to show you GoPro here in a second. Someone brought that up here in my analysis one time, and I really liked it. Now, so the right thing to do is to try to play the long until these supports break. But if the NASDAQ and S&P pull back further, you're probably going to take out this 35 low. So you have to be prepared for that. And it's better, you're better off not playing the short side of a stock, not with stock outright. If you want to try to capitalize on the short side, risk reward wise, you're better off buying puts, because if you're wrong, your risk is limited. Okay? If this thing starts gapping, whatever, some stupid news comes out, and you're short calls or you're short stock, it's going to be very, very painful. And you're not going to be able to get out, especially at a price that you want. So at least with a put, your risk is limited. Okay? If you don't know options, then don't worry about it. Then just wait for the next long signal. Now, as far as a long signal goes, what I would like to see, and I don't want to make the mistake of getting in on the first retrace attempt. What I would like to see is the failed high, the lower high, right? Something like that, followed by a pullback and then a double bottom or a failed low. That would be a sign of stability. And if we see something like that in square, we will probably be seeing similar patterns in the NASDAQ and the S&P and many stocks. So that would be a much better time to get into something like this if we don't get a really broad pullback. All right, that would be the market telling us that it tested that low and it's not going lower, and this market wants to be bought, and that would, your risk reward would make a lot more sense at that time, and your probability of the trade working out would also make more sense or be more favorable in that type of situation. So do you understand the difference compared to buying on a single candle rather than buying in relation to a price structure, which is a series of candles? All right, so that's an important lesson. Okay, cool. So POW, no problem. Yeah, so the euro, I covered that. I mean, we talked about that. I'll mention it again real quick. So technically, it's a long signal. And you can go back to the part of the video where I talked about it. Technically, it's a long signal. And yes, it is a long setup. You have the pin bar and all that. But like I was saying, if this thing fails to make a new high, then this structure here is not very bullish, right? That type of hesitation I don't like when I see stuff like that. And you may get a broader pullback. So in theory, the right thing to do is buy this thing, in theory, okay, on the pin bar and look for that higher high. But like I said, if it breaks the supports instead, then you're probably looking at a broader dollar retrace. And we talked about the inflection points for that. So you just have to be nimble and you have to be prepared in case it doesn't work out. But technically, the euro is a long at this point, which, is not good for our dollar franc trade. So we'll see how it goes. But I'm not going to adjust the dollar franc trade just because the euro is showing this to me. I determined my risk. I put the trade in, and now it's up to the market to play out in my favor or not. Okay? If it's real obvious, like on the dollar franc, then maybe I'll do something. But it's possible that the euro tries to bounce and it fails. And that will be good for our dollar franc. Okay, so that's the euro again. Okay. Well, but the thing is, those type of triangles are bearish. Okay, they're not bullish. The opposite, a descending triangle, is bullish. Ascending triangles are actually bearish. So, that's, if this thing breaks that triangle, then you're probably looking at that broader retrace on this thing, which would be a bounce in the dollar. Now, again, keep in mind, if some kind of dollar strong news comes out, I thought maybe NFP today could have been a catalyst for that, but obviously not. But who knows? Some other piece of news can come out of nowhere, and that's usually how it occurs. A chart is not going to help us see that. So all we can do is go by, the probability and manage our risk carefully, and that's it. Okay. Not if you need. Oh well. Okay, that's classic. That's classic chart patterns, and obviously, there's a lot of research behind that. But the way I've seen them, and I think it probably comes more from Elliott wave. When I see those things, I'm looking for the bearish. I see them as bearish formations. Okay. Okay. So yeah, it's, you know, it just depends on how you utilize the information, but that's the way I'm going with it. So obviously Edwards and McGee have a lot more credibility than me, but I have to go by my my rules and my structure. So and the thing that, you know, and my experience, of course. So we'll just see how that plays out. So, but technically, like I said, you have the pin bar, and this trend is bullish. So the euro, in theory, should make that higher high. But whether it does or doesn't, it's going to be up to the market. Okay, so cool. Thanks for bringing that up. Do I have any other questions about any other stocks that you guys would like to see, or any other markets? How's that? How's the DAX doing? Anyone trading the DAX? Any of you guys trading Forex? What is it? DAX EUR? Is it DAX? No, it's DE30 EUR. Because you know, we do pay attention to a lot of these Forex and CFD trades, and I'm always curious who's trading Forex. So look at this thing, right? I mean, so this thing was acting relatively weak for some time, and you see where it's failing. So we got that recovery candle today, just like the S&P. But this, again, another short candidate here, because you got these failed highs. On top of that, the DAX, this was an old trade idea that I don't even think it actually triggered. The DAX never took out that March high like the S&P. What does that tell you? That's pure relative weakness right there. So when this DAX breaks, this thing's going to get hammered. And that, you know, I don't know the exact correlation between the DAX and the euro. It seems to change a lot of times. But if this DAX gets hammered, I don't know about that euro. You know, I don't know where that euro is going to go. So we'll see how that goes. But anyway, so something to consider as far as shorts. All right, you guys, so I don't see any other questions. Do I have any questions about any of the recent trades that we took? Anyone want to ask about Bitcoin? You know, I know quite a few people were in that trade, and you know, obviously we all got stopped out in it. But like I said, stops save money. Okay, and we're prepared to get back in. All right. Keep in mind that we're trading a swing trade strategy that's based on this larger time frame. And when you go to online communities like TradingView and stuff, you're going to have a lot of people. For one, half of them don't even understand the time frame that they're on. Half of them. You know, if they're showing 4-hour charts, they're showing 1-hour charts. Those are more appropriate for day trades because they're going to have a lot of noise in them. They're not very appropriate for swing trades. The worst thing that they do is they mix up the reward risk. So they'll put swing trade targets on a 1-hour chart, but then they'll put a stop that is too tight. Okay, and then they can't figure out why they get stopped out. It all has to be proportional. All right. So my point is this is on the daily time frame, and that's how we're looking at things. That's why we didn't pay attention to that head and shoulders. Okay, I talked about that in the beginning. So MDB, let's take a look at it, Mike. MDB. So yeah, people have brought up Mongo. This is one that Henry Raines brought up, I believe, a number of times from the podcast that we do. And look at this one. So this was doing good for a little while, right? And now what do we have here? We have this range, right? And obviously, what does this look like? This to me reminds me of the S&P. Broke that range high, went slightly higher, and gave us a failed high at the top of the market there. So failed high situation, that's why you don't chase them, number one. Number two, that's why I don't like breakouts like this, because it's very likely to see that. Not all the time, but that's why I don't take those. Number three, so you have the bullish pin bar. But here's where you're now in the middle of the range. Okay? You're right in the middle of this consolidation. This is not a good place. to be putting on a long. Now, again, if you're a day trader, cool. You know, you want to try to grab a quick bite and take something out of this, you have a pin bar. So this thing has a little bit of room to play, you know, to the bullish side here. But as far as a swing trade, you are in the middle. So we don't know how this market's going to start out. We don't know if we're going to gap lower on Monday, right? We don't know. Although the market's trying to be bought up right now, that's why you're seeing these pin bars. But if we gap lower, this thing's probably going to test that low instead. And all these early buyers are going to be banging it out where? At the range low. That's the place to be buying this thing, okay? Near, maybe not exactly at the range low, which is what? What is that? 188, okay? That area right there. You may not get exactly there. You may get it slightly higher than the range low, you know, in the low 190s, maybe slightly lower than the range low, which would be a failed low, right? Those would be the best spots to get involved in this if you got a signal there. This is a tough spot, you know, for our strategy anyway, because it's so random here, all right? So the stock's a good stock, obviously. I mean, this is one of those CRM types, you know, Salesforce and all them. They all pretty much, what do they call this? The cloud stocks. So I would wait for something like that for a swing trade, especially if the market has that next leg lower and you start testing these range lows. That would be a much more attractive opportunity. All right, so a lot of this has the risk reward. A lot of it has to do with the type of time frame that you're interested in. And when I do these sessions here, I'm mostly talking about the swing trade or the larger, the broader time frame. Okay, so thank you for bringing that one up. And let's see what else we have here. Oh no, Pow, it's okay. It's cool. Yeah, and you know what? I don't feel like you're giving me a hard time. There is a lot of conflicting information out there from what you read, like in a classic book. Remember, that book was written in 1948, and they defined a lot of these patterns. And things are basically the same in terms of the way markets trade since 1948, okay, except technology's changed. It's just sometimes there are tendencies for things to behave slightly differently, and that's what I go by. You know, so as you build more experience, you'll understand what I mean. But you have to start somewhere, and those books that were written, you know, in those times, like the Elliott Wave book was written in the 1970s. You know, the one from Bob Prechter. That book you're talking about was in the 1940s. There were books written earlier, and those are good places to start because it proves that a lot of this stuff stays the same. Why? Because human nature doesn't change. That's why. It has nothing to do with technology. Okay, so thanks for bringing that up. Okay, Reggie, R-E-G-I. R-E-G-I. Let's see, what's this one? Oh, yeah, you know, there were a couple of stocks I'm noticing today that were doing pretty well in the face of this retrace, okay? So a stock like this, you have a nice recovery candle, and this thing has a higher low established right here, so that's all good. This thing looks like it wants to break out, okay? This thing looks like it wants to take out that high, which is what, $40, $40.70. The question is, what kind of potential are you looking at in this thing? I mean, looking back, I don't see any historical price action, so there's no reference points in terms of structure. So what do you do with this? Well, it's aggressive, but you know, if you're looking for a long, maybe early next week, maybe Monday or something like that, after you take out this high 39.36, a tight stop would be at this low 36. So you're looking at risking at least $3.50 right from the start, okay, something like that, to hopefully make that much, right? I mean, this thing, the way this thing's moving, it obviously has that kind of potential, and this thing is not following the market, so you do have that in your favor. Nice setup. So yeah, this would be a long, an aggressive long. It's just I'm not familiar with it, and I hesitate because I don't like what the broader stock market is doing. But this thing is proving that it's not following the broader stock market. So it's worth a try if you can handle that risk. Again, $3.50 to try to make a minimum of $3.50, which is, what is that? Puts you at like 43 something, 43, 44-ish. And that's doable. I mean, that's definitely doable at this rate. So yeah, I like it. I mean, I like it as a long. So thank you for bringing that up. A broader stop, by the way, would be this higher low at 33, but I don't think it's necessary to take that much risk. If you get into this thing and it takes out this low right away, that 36 low takes it out like right away, no reason to be in it anymore, because then you'll have a lower high and probably a range bound situation. So at that point, you know, what I'd like to help you avoid is it takes that out, then it takes this low out, and next thing you know, it's pulling back on whatever, some news, and then you get caught in it. No reason to do that. Okay, so cool. I like it. Nice long. Thank you for bringing that one up. I have to talk to Andrew about this one. Maybe it'll be next week's play of the week if it doesn't break out before then. All right, so thanks for bringing that one up. Yeah, so yeah, I mean, I like it. I like that higher low. All right, so Abhishek, how are you? BA. Okay, so I'm not a big fan of these. I avoid these stocks, but you know, this is a consolidation, and it's not, you know, you do have a broad higher low here, but there's no, and you do have that pin bar, okay, and you do have a higher low. I don't like all the news that surrounds these stocks. They're very sensitive to that. Also interest rates. So if you like it as a long, I would agree with the long, and you can define your risk pretty well here around this area. So I would work with it like that. But I usually don't like the things that move these stocks. Okay, so I would agree with you there. Thank you for bringing it up. POW, Ovid, OVID. Okay, this is one of those biopharma stocks. And hey, Mike. So Simon, I've heard of that stock. What's the ticker? What's the ticker? And I'll take a look at that one after this one. So Ovid. Let's see what we got going on here. First thing I'm looking for, inflection points. Okay, I see one there. I see one here. I see one up here. I see one over here. Right? Those are inflection points based on historical price action. So on top of that, you have the recovery has been decent since the recovery of that March low. This thing has been range bound. Okay. This is why I warn against buying at the tops of a range, right? Because you get caught in something like this, it sucks. Not only that, it went to the range low, tried to give you a pin bar, and it failed there too. So it's trying again at this level. So, okay, you know what? You're basically sort of like, this broke the failed low zone. There's like a zone in here. It sort of broke it, but you're getting a pin bar, a swift recovery. I like it. I like this as a long. Now, this is probably not going to be as sensitive to the S&P. These biopharma stocks, they all pretty much, you know, they all do the same thing pretty much, and they all react to the same type of information. So you have a pin bar to go long, and you have this range lows situation, and you have an inflection point there. So yeah, next week I would say, what is this? I like the price too, $5.50. This thing could be worth something here. The risk is basically measured by 5. So a stop on something like that could be placed at 485, maybe slightly lower. So it's not enormous risk, okay, if you can handle that. And, you know, potential wise, at least pushing back into the middle of the range, what are you looking at here? $7? So you're risking about $1.50 to make 2, maybe 3. That's good reward risk. So yeah, I like it as a long candidate. I like it. You know, even if the stock market has a hard time, this thing might do its own thing. So nice one, POW. Good one. So the other one you brought up, Reggie, and this one, yeah, not bad. Where are you getting these? So you always bring up these. I think you brought up AWK the other day too. Didn't you bring up AWK? And it's kind of doing okay there. Nice higher low situation. So you have a good memory. All right, SPG. Let's take a look. So this is, I've heard of this. I don't know where I've heard of it, but that looks very familiar. I probably saw it somewhere on a scanner. So inflection points. First of all, this did not recover very well, okay, off that March low. So we don't have a bullish structure as so many other stocks do. Now, it's not as nice as the other ones. I mean, you can make an argument that you do have a higher low here, but can you see the difference when we take a look at a stock like, we'll pop back here, like something like this, for example, right? Like AWK. Look at this structure, right? Nice clear higher lows, higher highs, followed by a higher low. That's nice recovery. Then we go to this, no recovery. So that tells me right from the start that this thing is going to be problematic in terms of longs. Although it's not impossible that this thing can go higher. It's going to be, there are better opportunities out there. But let's take a look. Let's take a closer look. So you do have a series of little mini higher lows, and you have this attempt at a breakout. I don't like this because this can turn into a failed high right here. You have this little region that can turn into a resistance. And if that turns into a failed high, you will then establish another broad lower high. How much is this stock? $70. This one may be a good one to buy puts, actually, especially if the stock market continues lower. Now, interestingly enough, the stock market has pulled back, and this thing's not pulling back. So that's interesting. But the overall structure, I'm not a fan of at all. So I would be considering puts, okay, not calls or not longs in something like this, at least for an attempt at a lower low or a break of the 60 level. That's based on this structure. That's what I'd be looking for on something like this. Now, in order to cancel that idea out, for one, it needs to follow through above this little resistance area here. It needs to follow through, and then pull back and give us a better structure. But again, like I said, I hesitate on this one because there are many opportunities out there that look better than this thing. And is this thing really a big mover? I guess when this thing starts to move, yeah, this thing moves. I mean, you had a low 65, yeah, $10 moves, then a gap. I mean, this thing can move when it moves. But I'd be careful with this one, okay? Thank you for bringing that one up, though. All right, so Pow, I have screeners I watch. Oh, yeah. Oh, okay, VUZI. Yeah, I remember that, too. There's another one you brought up. Yeah, wow, look at that. Yeah, very nice. VUZI, VUZIX, I guess is what they're called. Nice move there, wow. I know you've mentioned that a few times. We didn't do anything with this, though. What were we thinking? I don't know, Pal, you're going to have to start making some calls for us. Okay, hey, Shayshank. All right, so, yeah, sure. Pal, pairs trading, that's usually done with, you buy one stock and you sell another stock against it. You're playing some kind of relationship. That's the same as a Forex pair. People do it with futures as well. It's the same as, buying the euro and selling the dollar. It's the same idea, except when you buy a Forex pair, it's automatically done for you. You can do this with stocks, like you can buy Intel and short Microsoft, or buy Microsoft and short Intel, and there'll be a relationship that you're playing between the two. It's a little bit more, you're looking for the relationship to either converge or spread apart. And that's really like where the opportunity is. It's complicated, and I just go straight out like, I'm either long or short. I don't like to get too confusing with those pairs, so I don't trade pairs. But there are some people that's all they do. And they consider it lower risk, because if you're long Microsoft and you're short Intel and they're basically moving together, you can't really lose a lot of money because it's not like they're going to not move together. It's just that either one's going to move faster than the other one. And that's where your high probability possibility of taking money out of it is. You need one to move faster than the other one because they're basically going, they're moving in the same direction. And your long one and short one. So yeah, thanks for bringing that one up. I haven't heard about that one in a while. So hey, so Shayshank, this guy is from India, and it's like what is over there? 2 a.m. Thanks for stopping by. It's nice to see you. Okay, Mike, appreciate. Okay, cool, no problem, Mike. Well, Mike, thank you for stopping by as well. I haven't. We get some new people here, and it's nice to see some new names. So anyway, great stocks, everyone. Do I have any other stocks or other markets that you'd like to see me cover real quick before I wrap this up? How am I doing with time? 59 minutes. Wow. I talk so much, I don't realize how long I talk for. So anyway, if you're new to the channel, hey guys, make sure you subscribe to the channel here and like the video if you like it. Also, make sure you check out our website at greenbridgeinvesting.com, We do have swing trade signals by text and by email. We have portfolio management ideas, and we have a chat room where we share perspective and analysis and trade updates throughout the day. And a lot of people here have made some nice trades off of the information that we provide. So anyway, you guys, all right, if I don't have any more questions, I'm going to wrap this up. Right, Jamia. Oh, you bought some. Oh, nice. Yeah, we had a question about that in the chat room, and Jamia, and Andrew was talking about this thing. You know, we've been looking to get back in. You have that nice pin bar. I'll tell you what, Abhishek, if that pin bar sticks and you don't take out the low, because remember the other day on Wednesday I said, watch out, this formation can turn into a, can take out that low. Well, we got it, but now you're getting this little recovery candle, right? 902, and you got this thing at 8, so or below 8. So that's a great price, So now if anything, you're in from a good price, and now you have some flexibility. If this thing, it didn't even give you a buy signal, and you're in. So that's a risky thing to do. A lot of times you can get caught in something that keeps going lower when doing something like that. But hey, sometimes it works out and you get a really good price. It's just not something that I would do with a lot of size, because over the long run, you'll find out why. So thank you for bringing that up. Yeah, I think you'll be okay. Oh, that was you in the chat room. Oh, okay. Yeah, we like this thing long. I mean, we like this thing. It's just, there has not been a clear signal yet. And this is the first now, today, after this close, which you have a half hour, this is a good thing, what you're seeing here. If you take out the high on Monday, which is, like I said, that 9 level, that will actually be a buy signal on Monday. So you're in before the buy signal. So it's not bad. If the stock market has a hard time, this thing may push lower. But if anything, I'll tell you this, if anything, you're not buying the high. If anything, you're buying near the low. So it's a much higher probability and theoretically lower risk location. Okay, if that makes sense. Well, no, I mean, it's, it's kind of random in a way, because just like our dollar franc trade, I put a limit order in, like 20 or 30 pips below the market. I don't know if that's going to fill, and it filled yesterday, right? Was that, some kind of skill that I have? No, it was just random price action. I just had a good idea that we were going to get that random price action, and I put in a price, and they filled me there. Okay, so there's really no skill involved in that. It's just understanding probabilities, and then it's up to the market to either cooperate with you or not. Okay, cool. All right, nice. I think you'll be okay with that one, Abhishek, especially if there's a bounce next week. You'll at least be able to get some green out of this. I don't know if you're going to go back to these highs of $23, but I think you'll get something out of it. Okay, I mean, maybe we'll call that as a swing trade too early next week, possibly. We got a few candidates here. So thank you again for bringing that one up. All right, you guys. So if that's it, I'm going to wrap this up now. I've been at it for an hour. I try not to keep these things too long. I want to thank you guys all for your great questions and all of your participation. Again, I hope you like these videos, and I hope that you get value out of them and that you're able to make better decisions when you have to make these decisions on your own, right? Because that's what confidence is all about. You must have confidence, otherwise you're going to make emotional decisions, and those will not be helpful. All right, so my sound is very low. Since when? Why is my sound low? Maybe that's your connection, Shashank. No one else is complaining. Anyone here? Anyone get a low sound? Abhishek, do you do a webinar every day? No, I don't. That's a good question, Abhishek. I don't. I try to do at least 2 a week. I do these analysis sessions. And then we have training webinars that we do once a month that I do, I do that in a separate webinar chat room that we have. But yeah, I try to do these at least twice a week if I can. I don't get them. I don't get to do them every day, or sometimes not every other day. But I try to get a couple in, to at least provide everyone with some kind of update, and update, where our trades are, and answer people's questions about markets they like to see. Okay. Okay. Cool. It could just be Shayshank's connection. Sometimes the internet is funny that way. So again, And plus, Abhishek, we do have all those updates in the chat room, as you know, and all that kind of stuff. So I do have some more plans on the way to produce some more educational type of stuff, but we have a lot on our plate, so it's very hard for me to get that stuff done when I have a lot of signal work and analysis that I constantly have to do. So anyway, you guys, all right, cool. So thank you again. Hey, make sure you check out our podcast next week on Tuesday, right? Talking Markets with Mark and Andrew. If you missed the previous one, you can watch it here on this channel. It's there, and I'm always working on making improvements to that podcast as well. We try to cover all the markets there, and we also try to cover them from a fundamental perspective as well as a technical perspective. Where in these sessions here, alone with me, I'm only doing technicals and short term at that, right? Where I'm focused on swing trades mostly. All right, so cool. All right, everyone. So thank you very much again for your participation and your great questions. Enjoy the rest of your Friday, wherever you are in the world, and I will see you next time. Have a great day, and I'll speak to you then. Thank you.